Hello, everybody, and welcome back to the Last Honest Realtor, your first podcast of 2025. Thank you so much for joining me. I'm your host, David Fleming. Yes, it is 2025, and this is the first podcast back, and I am back at work. Very happy to be. I did have a fantastic break, and I hope you did as well, whether it was your Christmas break, your Hanukkah break, your seasonal break, your holiday break. What do they call it in school now? Winter break. That's what they call it in my daughter's school. So whatever you celebrate or whatever you do not celebrate, I hope it was a joyous, that's a word associated with Christmas. I hope it was a fantastic, festive break for you. Now, I'd be lying if I didn't admit I was in the office a couple times over the break. And sometimes that's because you have some work to do. And other times it's because you need a break from the break. But yeah, it is really good to be back. And we're in the office. We've been here basically since January 2nd, looking forward to 2025 in the real estate market. And the first podcast back, I thought today, let's do what everyone else is doing, real estate predictions, except we're not going to do that because we do things differently. I always have done things differently. And frankly, I've been reading a lot of the real estate predictions, whether it's from economists or whether it's from real estate agents. And granted, people like predictions, of course, but it's the same old, same old. With respect, I understand not everyone wants to listen to, economic data, which is what we're going to discuss today. Spoiler alert. But, what is the average home price going to do this year? And what are sales going to be like? Sure, we could talk about that, but I want to do it a little bit differently. I want to take a deeper dive, and I want to look at some of the factors affecting the market, some of the socioeconomic, macroeconomic, political factors, because yes, I could tell you that, I'm going to predict there's 88,000 sales this year. Okay, that's it. We're done. Can I go for lunch? No, I could predict that 1 month this year, we will see an average home price of $1,230,000. Okay, now I can go. I'm leaving. Seriously, though. Second coffee of the day. It's the other thing about, being at home for 2 weeks is that I don't like drinking pods. I actually did escape to Tim Hortons multiple times. No, folks, seriously, I want to take a bit of a deeper dive. And again, with respect to the columnists who get a couple hundred words, and of course, it's clickbait, it's headlines, market to increase 8% per Remax, or market to remain flat per Royal LePage. I think I actually had those backwards. Today, there's a few different things I want to talk about. I mentioned major factors. I want to talk about Bank of Canada rate cuts. I want to talk about the Trump tariffs and recessionary conversations. I want to talk about the Canadian federal election and the state of politics. I want to talk about supply. And I want to talk at a deep enough level that you're going to understand what to look out for and how this is going to impact the real estate market in the year ahead. So to sum up last year, 2024, and if I were to look back, I'd say probably 2023 as well. Both years were these kind of slow, plodding, up and down markets with these cycles within the cycle. And what I mean by that is if I look back at 2024, I started the year with this one incredible listing. And it was the first big listing in the area. And everyone said, you're going to do amazing. And guess what? We didn't do amazing. We had 3 offers on the offer night. One was okay. One was not good, and one was downright terrible. The one that was okay eventually got a little bit better, and we sold it. And I don't think the sellers loved it. I mean, they told me as much. But that's how the year started. Then we had this run up into the month of February where absolute insanity. Again, we're back to multiple offers. We're getting 20 offers on things. And this continues through March and into April. Then you get into May, things really slow down and they get spotty. And I did have one listing. I mentioned this in a couple of previous podcasts on the east side, where I told my client after they sold, mark this date down because this is the peak of the market in 2024. Seriously, though. I think we sold that house for $1,850,000. And by the fall, I told them, you'd be lucky to get $165,000 today. That's just the way that the market went. So in the summer, it's slow. The fall, it's slow. We've had 3 bad falls in a row. And as I said, 2023 and 2024, they were very similar because we usually have cycles within the cycle. We will have a busy spring and a slow summer, whether it's the peak 2017 year or the peak 2022 year or 2021, which was just red hot all throughout. But it's been really slow and plodding. And I think that my overall prediction for 2024 is we're going to solve that. So opposite ends of that, well, it's either going to explode and be busy all year, or we're going to have a catastrophe and the 90% crash that, the market bears have been predicting. No, what I mean is that I think that last year there was so much uncertainty in the market, and we're going to talk about sales because that really underscores that uncertainty. And that uncertainty kind of left things going up a little bit and then down a little bit and then flat a little bit and then up a little bit and down a little bit. And you might say that's a typical market cycle as far as a calendar year goes, but that's not what I'm accustomed to in the city of Toronto. So I want to dive in here and again, talk about interest rates. And I'm sorry, I'm not going to make this boring. I'm going to tell you in advance. Interest rates are one of the most boring topics over the last 2 years because we continue to talk about them over and over. Interest rates, inflation, unemployment. But as I said, if you're looking for a very basic prediction, maybe I could give it to you in a really cool TikTok video or perhaps just like a GIF or something from like Friends, like maybe Ross and Rachel in terms of a GIF that relates to the real estate market. No, that's not what we do here. So I apologize. We're going to take a bit of a deeper dive. The Bank of Canada rate, it was at 5%. That's the high, up from 0.25%, which was, of course, the low, pandemic affected. And last year we saw it reduced to 3.25%. So coming into this year, the conversation was about the interest rate and where it's going to go. Benjamin Tal, who's the one economist that I follow the most closely, Benjamin Tal has been saying we need to be in an interest rate neutral territory, which is 2% to 2.5%. And he's been saying this since we were at 5%. Now, he has routinely said that we are two things. One, not cutting soon enough. Two, not cutting fast enough. Now, if you look at the economic indicators that to me are sort of the greatest predictors, if you will, of what you should be doing with respect to the Bank of Canada rate, they would be inflation and unemployment. Now, at the peak, which was in 2022, we saw inflation at 8.1%. Of course, Benjamin Tal would say, and I don't know if he's been quoted on this, but again, you need to raise rates sooner than you did, which obviously they didn't, and you need to cut rates sooner than they did. This is what he's been saying over and over. So last week, or I guess 2 weeks ago by the time you watch this, there was an article in the Globe and Mail. The title was, "The odds of a Bank of Canada rate pause have now clearly increased. How economists and markets reacted to Friday's surprisingly strong jobs data." Surprisingly strong jobs data. I have a problem with this, and I'm going to explain why. But let me quote the article. "Money markets are pricing in lower odds that the Bank of Canada will cut the interest rates again later this month," which is January 29th, the scheduled date, "following a robust jobs report today that showed nearly quadruple the number of jobs created in December than forecasted." And remember, it's all about the forecast. "The economy added 90,900 jobs last month, largely full-time work, according to Statistics Canada data." Now, here's what I have an issue with. The unemployment rate ticked down to 6.7%. Analysts polled by Reuters had forecasted a net gain of 25,000 jobs, and the unemployment rate would rise to 6.9% from the near 8-year high of 6.8% in November. Let's take stock of that. 6.8% to 6.7%. Fire a cannon and celebrate? That doesn't make any sense to me. Now, again, I'm no economist. I'm no analyst. I'm not writing articles. But the article continues, prior to the data, money markets were putting 70% odds the Bank of Canada would announce a quarter-point cut in its overnight rate at its next meeting, January 29th. Now they're putting nearly equal odds on a rate cut or no move at all. I think it was 51%. So here's the issue that I have. And again, what are my qualifications? I don't know, a business degree with a minor in economics a quarter century ago? Wait a minute, what? A quarter century? When did I graduate? 2002. Yeah, almost a quarter century. Ew, that's gross. So go back to January of 2023 and our unemployment rate's at 5%. It continues to increase. And we are 5.7% in January of 2024. And we peak at November at 6.8%. So we're at peak. We're 1 month off the peak. Now, meanwhile, inflation in January of 2023 is 5.9%. And then by January of 2024, it's down to 2.9%. So we start cuts. So folks, November of 2024, we have a 6.8% unemployment rate, high, and we have a 1.9% inflation rate, low. And then all of a sudden we're down 1/10 of a point and we're ready to sound the alarm and celebrate and not cut the interest rate. That doesn't make any sense to me. But again, and I wrote this on my blog, and I'm fully ready for the blog trolls to say, look at this guy wishing that there were more interest rate cuts so he can sell more real estate. I mean, listen, I'm going to be fine. I'm not going to lie. I don't need that cut to help us sell real estate or have a good year. I'm just saying, from what I understand about economics, the interest rate should continue to be cut. I agree with Benjamin Tal. I think we need to be in an interest rate neutral territory between 2 and 2.5%. And if you want a prediction, fine. My prediction is by the end of 2025, we will be at a Bank of Canada rate of 2.50%. So that's 75 basis points cut from now until the rest of the year. Of course, I think everyone's predicting 2.5%. So it's not like I'm really doing anything, to the contrary. But that's the thing with predictions, is that most of them fall within this very narrow band. But that's why I wanted to have the discussion. And that's why I wanted to highlight, as I said, the economic indicators that I look at, which are inflation and unemployment. Because you need to understand, other than just a simple prediction or an article saying that, hey, we had a good jobs report. Did we? Really? We have a good jobs report? Yeah. Okay. 4 times the expected number of jobs added. Basic math here, guys. Okay, ready? 6.8%, 6.7%. We're down 1/10, and that's 1/10 off of an all-time high in unemployment. So yeah, I think the rate's going to continue to come down. Now, the second thing I wanted to talk about was Trump tariffs and recessionary conversations. So call me naive. I just don't think Donald Trump is going to blow up the relationship between Canada and the United States. Say what you want about Trump. That's a topic for another day. We have a few weeks ahead of us, and a lot of people are just waiting. And I don't want to betray confidences, but we had a company meeting here to start the year, and one guy's going on and on about Trump tariffs, and I'm just like, dude, look outside. People are out there looking for real estate, and I will talk later some empirical evidence about our listings that are coming out and what I'm seeing in the market. But again, call me a salesman if you want, but people are out there. They're looking to buy real estate. They want quality product. I just don't think that the Trump tariffs, this guy's saying we got to wait. I think it's going to be really slow, and I think once the dust settles in May, May, it's over. That's what I said earlier. It was over by May of last year. And by June of last year, I could not sell a freehold house in the central core at an entry level price point that I would have had 20 offers on, 7, 8 offers on prior in February, March. So I don't want to spend any more time on Trump tariffs and recessionary talk. It was just one point I needed to mention because everyone's talking about it. I think it's so much speculation. And again, when I look at the conversation that was had at that meeting with the gentleman that was going on and on about it, I thought this is just fluff. It's nothing. That's all it is. So let's move on. Oh yeah, no, let's talk about something that won't ruffle any feathers at all. Oh God, Canadian politics. Disclaimer, explanation. Yeah, okay, I guess. You might not be surprised to know that I'm not a liberal. I mean, I always thought I was a social liberal. It's very different now, but I'm a fiscal conservative, and I have grown to absolutely loathe not just the Liberal Party, but liberalism in general over the last few years because, Justin Trudeau, he took liberalism and he just made it into something really, really different. That's my disclaimer. So we are going to have an election this year. We're going to have a new prime minister, we think. More on that in a moment. Do you remember Pierre Elliott Trudeau? Yeah. And really, I think going forward this year, you can talk about interest rates, you can talk about Trump tariffs, you can talk about the relationship between the United States and Canada. We can talk about supply, which we're going to. But I think one of the major factors that's going to affect the market is the Canadian political landscape. Now, just to flesh out my thoughts, can I share with you something I wrote on my blog? This was really handcrafted. This is a David original. Mr. Trudeau has cemented his legacy as the most unqualified, ill-fitted, useless, clueless, ineffective, arrogant, self-serving, self-righteous, virtue-signaling, sanctimonious, hypocritical, and obnoxious politician that this country's ever elected to office. You like that? But I fear it's actually worse than that, because as I explained, the country needs a new leader and a new direction now, but as his final act of insult, Mr. Trudeau has ensured we will languish without a leader, direction, or advocate at a time when we desperately need it, so that the Liberal Party can have a public popularity contest to be trotted from town to town. That's where we find ourselves right now. Did you not like? Because I loved it. I every single word there, I really picked really hard, and they're hard to disagree with. So we are going to have a leadership convention. We are going to have an election. And if I were to try to look at the other side of the coin, No, I just can't. I was going to say that the whole point of politics is to be in power and that any party would do this. Maybe they would. But now is probably the worst possible time to prorogue our parliament and then just sit around and do absolutely nothing. But it is what we've got. So the limbo that exists, and you can be like, I can't believe you just said that in a public forum. Oh yeah, no, that's the worst opinion on the entire internet. But I think point being is that we're going to have a large percentage of the population that is just waiting. They're waiting for what's happening with Donald Trump and his threat of tariffs. And then what's happening with the Canadian election? Are we having an election? We have no government. We have no prime minister. What's happening? So again, far be it for me to say, guys, I think the market's going to be very robust. I don't expect there to be major fallout from this. But at the same time, I understand if there are a lot of people that are going to be sitting on the sidelines. So I did mention Pierre Elliott Trudeau, and I don't want to turn this into a politics podcast, but for many people, you need to understand the background because I myself, I was born in 1980. I wasn't around for this. But you have to remember that Pierre Elliott Trudeau resigned in 1979, just like Justin Trudeau resigned in 2024. But Pierre Elliott Trudeau did not leave until 1983, 1984. So there's a great article in the National Post by Tristan Hopper. It's called The Last Time Canada Had a Trudeau Who Refused to Leave. I think everybody should read that just for background. And there is a quote that Brian Mulroney gave at the time. Quote, "The damage and the sadness that's been inflicted on the Canadian people by the actions of a Liberal government for the last 15 years are so substantial that it's going to take infinitely more than a cosmetic little change. The Liberals have absolutely devastated this country." Wow. Who says politics isn't a dirty game? Now, Justin Trudeau has been in office for 9 years, not the 15 like his father. But the point remains, Pierre Elliott Trudeau did resign in 1979. He did not leave office, and you can go to Wikipedia or any history book and see he ended up with another term. He ended up in office for another 4 or 5 years. We think we're going to have an election. We think we're going to have a change in leadership, but I have no idea what that landscape looks like. And the level of uncertainty that exists in the political landscape right now in Canada might affect the real estate market. So there are conflicting reports in the newspapers. Toronto Star publishes an article last week that says, "Say what you want about Justin Trudeau, there's still no arguing Canadians became wealthier while he was in power." The National Post fights back and says, "No, Trudeau did not make Canada richer." Toronto Star columnist fails to account for inflation. So this is the problem that we're seeing out there right now. Who do you believe? Now, if you want to read the National Post article, you will note that, again, Toronto Star not accounting for inflation, not accounting for an increasing population, and it concludes economic growth during the Trudeau years was less than 20% of what it was during the Harper era. It was an increase in real GDP per capita of 0.8%. versus 4.4% during the Harper years. So again, my point is that, what should my point be? Don't believe anything you read, or you can make an argument any which way you want, or that there's misinformation out there. And again, this is kind of the root of so much of the perils of social media or where you get your news. Is there any news source out there that is not biased or slanted? We have two major newspapers giving us two completely different conclusions. So all that said is the following. Let's assume that we have a conservative government. What do we expect, and how is this going to affect the real estate market? Now, Pierre Poilievre, or however you pronounce that, we're going to have to figure that out. I've been saying it for 4 years. He apparently is a fan of Milton Friedman, the economist. Now, Milton Friedman, for those of you that you don't know, believed in small government when absolutely necessary. And a great article in the Maclean's magazine over the holidays said, quote, "Since childhood, Poilievre has been a devotee of the University of Chicago economist Milton Friedman, who argued that government should only involve itself in citizens' lives when absolutely necessary. That's never been the governing philosophy of Canada, where citizens have come to expect a European-style welfare state, and businesses are protected from international competition by regulators. Poilievre would like to reduce the size of the welfare state. He's declined to make any promises about maintaining pharmacare and dental programs the Liberals brought in with the NDP, but history shows that voters punish governments that take away benefits they're accustomed to receiving. It'll be a great reckoning, cheered by some, feared by others." So a change in government is going to bring about change socially, economically, and of course from a benefit standpoint. But again, going back to real estate, it sounds to me like if you look at Milton Friedman, and again, there was a great article in, again, the National Post that was talking about the Canada Post strike, how Milton Friedman would say that people complain that capitalism is just based on profits. And Friedman said, well, it's based on profits and losses. And there is no better, excuse the term, enema to the entire economy than the opportunity for profits and losses to rid yourself of the poison in the body, if you will, of bad business. So in the private sector, businesses that lose money go out of business. And that's what Friedman would say. In the public sector, they continue to get propped up. And this is what I think the author was applying to the problem at Canada Post, is that, they continue to lose billions of dollars. So if Pierre comes in, are we going to see a major change in the role of the public sector, right, via something like Canada Post? And if you're following me a long time to get to this conclusion, are we going to see a major change in how the government is involved with housing in Canada? So one of the things I discussed at this table with Ben Rabideau, no, I think we were on Zoom, but I was at this table, is he was talking about how Pierre Poilievre does not love the CMHC, does not love their existence or how they're involved in the housing market, how they might prop up the real estate market on the backs of taxpayers. And one of the things Ben was talking about was that right now, the CMHC, in order to get rentals built in Canada, is going to offer a 95% loan to value for any purpose-built apartments. So imagine you're a developer. You have a piece of land, say you paid $25 million for it. And now you're thinking, I'm going to build condos and it's going to cost me $200 million to build these condos. Okay, I'm sure you have partners. I'm sure maybe some banks or some funds would be involved, but how much of your own money do you need? You could say, why don't I build the exact same thing, but I'm going to build apartments instead of condos? Now the CMHC is going to give you 95% of that $200 million. Okay, sign me up. Let's build rentals. So it's great if we want rentals to be built. And it's not so great if we consider just how much more of the burden the CMHC is taking, which of course is on the backs of Canadian taxpayers. So I look back to the previous election and I think, what did we get out of the previous election? Or let's say 2 elections ago, because God, we had 2 elections. Canada's funny like that, right? This whole non-confidence vote nonsense. Say what you want about the 2-party system in the States, but at least they have regular elections every 4 years in Canada. And again, you look back to Pierre Elliott. I think Joe Clark was in office for how long? A few months, and then there was another election. It's just wild, the non-confidence. But then you can have a non-confidence and then you just don't go ahead with an election. I believe that happened with Paul Martin, and I believe, unfortunately, that might happen again in a couple of months. So the Liberals gave us the first-time homebuyer incentive, if you recall. This was the idea that the government was going to go into business with the public. Shared equity mortgages. Here's our idea, says the government. People that can't afford to buy homes should buy homes. Huh? You like that? So here's what we'll do. We'll take all of the people financially unqualified to afford homes, and then we'll not only help them to get into the market, but we'll backstop it on the backs of the Canadian taxpayers. That's my cynical viewpoint of what the first-time homebuyer incentive was. And again, look, I'm not saying that we shouldn't help people get into housing, but the idea that everyone needs to own or everyone deserves to own or what have you, if you are financially unqualified to enter the housing market via home ownership, the government's going to come along and say, let's ensure these people can get into it. I mean, look, that's socialism, that's welfare state, and that's everything that's wrong with that whole, liberalism ideal. So eventually the program fell on its face and it was scrapped, I believe, in 2024. But again, point being, what could a change in government do to the real estate market? So I'm going to sum up all my thoughts on politics as follows. Let's see, David spent about a minute and a half just absolutely tearing apart Trudeau and the Liberals. I'm sorry, again, if you're part of the 16% that wants to vote for him, I don't know what to say about that. No, but in all seriousness, I think that the uncertainty is part of it. And I think we're going to have a very busy market out there. And I'm going to speak to that in a moment. Don't get me wrong. And that's not me pumping tires. That's not me trying to be a salesperson. I think we're going to have an extremely busy market, January, February, March, April, through all of what I would call the BS. But I also think that because the Liberals are running a leadership convention, and they said they'll pick a leader on March 9th, because Parliament's been prorogued until March 24th, and because after that, we're going to find out if we're having an election or not, there's going to be a lot of people that are sitting on the sidelines and waiting. But that's not unlike last year for all the folks that sat on the sidelines and waited because there was uncertainty about interest rates. Now, I want to talk about supply because that is a big one. But first, I think I'm going to need another sip of coffee. So let's take a quick break, and I'll meet you back here. Welcome back. Now, before the break, we were talking about predictions for 2025, but not silly little predictions like you might see splashed across a media headline. We're talking about the factors and the themes that are going to affect the 2025 market. One of those is going to be sales. Now, I will say sales and inventory because they kind of go hand in hand. And the theme out of 2023, 2024 was that nothing's really selling. And there's a massive glut of inventory. I will say this in the spirit of honesty. Those are not exactly incorrect takes. Here's some data for you. And I put this in my early 2025 blog. I did a 3-part blog series on Toronto Realty blog, which I called What's on My Real Estate Mind. There were 9 different things, one of which was sales. So try this on for size. There were 67,984 sales in 2024. The record 3 years prior of 122,000 was almost double. Now, 67,984 is the second worst year ever. By ever, I mean since 2002. I have been tracking this data since 2002. It's not really an arbitrary date. It's when TREB started with these existing districts. Anything before that, in addition to maybe being geographically incorrect, is of course a long time ago, and we have to account for population growth. Regardless, 67,984 sales, worst year ever. But as I wrote on my blog, we have to account for the supply. So if you look at what's called new listings, and again, you could list a property 4 times and it'll count as 4 new listings. But if you look at new listings, the record low of 66,315 sales came in a year where there were 141,026 new listings. David, too many numbers. You're hurting my head. Fine. The absorption rate was 47%. That's the ratio of sales to new listings. Last year, the absorption rate was 41.2%. So while we technically had more sales in 2024 than in 2023, because we had so many more listings, the absorption rate was lower. Now, the record absorption rate, 73.4% in 2021. 2016 saw 73%. And you have basically every single year, with the exception of 2022, 2023, and 2024, and of course 2008, all the other years were above the 50% threshold, which makes it theoretically a seller's market. Last year we had 41.2%. So if you were to account for the increase in the increase in inventory, I might offer you the following take. 2024 was the worst year in GTA sales in the 21st century. Again, it was the second fewest sales. But when you look at the absorption rate, you can see the proportional difference. So I might argue it was the worst year. So you might be saying, hold on, now you're going to tell us that you are a market bull. You're going to offer us insights and analysis speaking to the strength of the market coming out of what you just described was the, quote, worst year ever for sales. Yeah, I'm going to do exactly that. Because if the average home price throughout 2023 and 2024 was pretty much flat, and again, it went up, it went down, it went sideways, it went up, it went down. That's what I was saying in the introduction, was that we just sort of couldn't get into either a massive decline or a massive increase. It was basically flat. If we saw interest rates increase from 0.25 point to 5% and all-time high inventory and all-time low sales and prices were flat, well, then what the heck do you expect to happen this year? When the interest rate is at 2.5% and when we have probably fewer new listings and extremely likely to have higher sales. I, of course, am leading you to believe that the average home price will increase, but via the higher sales. So it's simply to say that when you have a decrease in interest rates, you have more affordability. And when you have more affordability, you will have more sales. So this kind of leads into what I was talking about in the fall of last year. And to be honest, even in the summer, because I bought my first investment condo last year in February. I bought my second investment condo last year in August. I may have been 6 to 9 months early, as has been noted in other podcasts, but I did this because when you've got interest rate cuts on the horizon, you're going to have affordability increase. When affordability increases, you're going to have more sales, and then prices are going to go up. So if we were to look at what's happening right this very moment, and by that I mean mid-January, inventory, sales, demand, I would say that there is a lot of pent-up demand. We hear this term a lot, pent-up demand. What does that mean, pent-up demand? It means that you have new buyers entering the market because it's a new year and it's a new me. You have buyers from last year that did not purchase. And then you've got some of the people that, and I had a phone call with somebody the other day that was like, I've been looking for 2 years, but I really want to get in the market now. You have those folks that are really lighting a fire under themselves. So the pent-up demand. Now we have 2 listings that are coming out this week, both on the east side. Both are in that kind of entry-level standpoint of 1.4 million, let's say. I put together a shared spreadsheet on our drive, which I give the clients access to help them keep track of the market. Listen to the following, because everything we talked about at this point is hypothetical. This is real and from the market. When I sat down to look at all the new listings for freehold under 1.6 million, there were 18 listings. And that was, I think, from the Monday to the Thursday. That's not a lot of listings. But of the 18, how many were relisted from last fall? 13. So there's 5 new listings on the entire east side, E1, 2, and 3, below 1.6 million. That's not a lot of inventory. Now, again, if we strip away, 2 of them were absolute guts. And again, one of them was in Riverdale. It's a great gut. It's a great project, but that's not for everybody. That's for someone looking for a project. And then 2 of them were just, I don't know, I think one was tenanted and one was gross. One quality listing out of 18. That's where we are in the market. And so I told both of these clients, you're bringing your property out and it's January and you might think, well, as per what I just told you in the preceding 20, 30 minutes, however far along we are here, we have uncertainty based on Canadian politics. We have uncertainty based on Trump tariffs. We have, are we getting a rate cut January 29th? We're not sure. But despite all that, somebody looking for a $1.4 million house on the east side, there's nothing to buy. Well, thankfully, we have 2 coming out on the same day, different areas. So just think about that for a minute, guys. I can talk to you about the statistics from last year, 164,000 new listings, or I can talk to you about the record low 66,000 new sales from 2023, followed by the second worst ever data point for sales, which was 67,984 sales in 2024. Or I could just talk to you about what's happening in the market right this very second. And it's a very small sliver. We haven't talked about condos, which we will. But if you're a buyer looking for an east side home for 1.4 million, almost everything out there right now are relists from last year, or they're tenanted, or they're reno projects. That's the market. And that to me speaks to what we're really going to feel this year. And that's going to affect sales and it's going to affect inventory. So again, you go back to my very first point. Do you want a prediction? Put something across the headlines. Clickbait. David says sales increased 28%. Okay, I don't know. Who cares? Let's talk about the actual data, the actual factors, the economic indicators, and then the empirical evidence. You're a buyer for 1.4 million on the east side. There's nothing for you. So imagine you're coming from a different country and you are looking for a home to buy and you show up and you say, okay, show me 10 places. Oh, I'm sorry. There's currently 0. Now, again, there are some, but they're relists from last fall. So one of them, and I don't want to name a street address, but a colleague of mine in another firm, I saw he put out a listing. I was like, this looks familiar. Yes, it's tenanted, which isn't the end of the world, except the tenants haven't given notice. So you're trying to sell a property that's tenanted, and you're hoping that when you sell it, the tenants will actually leave. You can give them legal notice. They might not leave. It also doesn't show well. It's not staged. You don't have unfettered access. It's a good property. It's a B- property, but it's a D- listing because, and as I'll explain later, it's in my notes, I don't want to sell my buyers a tenant property because of the issues that exist in the relationship between landlords and tenants in the province of Ontario. So I want to move on, as I said, to condos. Because when I talk about sales and inventory, I'm talking about freehold. The condo market's not great. If we're going to look from a predictionary standpoint, is that a word, predictionary? I want to talk about what's going to happen a couple years from now. So here's some headlines for you. February 1st, Urbanation's website. You familiar with Urbanation? Yeah, they're the stats guru. GTA new condo sales fell to 15-year low in 2023. April 22nd, their headline reads, GTHA new condo sales fall 71% below 10-year average. July 18th, headline reads, slowest first half for GTHA new condo sales in 27 years. And finally, on October 18th, headline reads, GTHA new condo sales fall to nearly 30-year low in Q3 of 2024. And that last report noted that new condo sales fell 81% year over year, and new condo sales were 87% below the latest 10-year average for Q3 periods. Now, I've never sold a pre-construction condo in 20 years in this business, and I never will, for reasons that we can't get into right now, because I have not only done entire podcasts on this, but I've been discussing it for my entire career. So the point is this: the way that we build the city of Toronto, not a blueprint for any other city on any other planet, but we take an empty parking lot or derelict buildings that have been assembled. And then we say, we're going to build a condo here. And then we pre-sell them to people. And if we pre-sell enough, a bank will finance the project, and then we'll move forward and build. If you can't pre-sell, you do not build. And that is what's happening right now. So I don't want to rehash this because we discussed a lot last fall, but essentially the pre-con prices have always been ahead of resale, which makes absolutely zero sense to me, as I've discussed in so many other different mediums here. But who's going to pay $1,650 for a pre-construction square foot when you can buy next door for $1,000? It's rhetorical. So if we can't pre-sell, we can't build. And those stats that I just showed you, numbers like down 81%, that speaks to the dearth of inventory. Dearth, D-E-A-R-T-H, not Darth, as in Vader. That's such a dad joke. The dearth in inventory that's going to take place in 2 to 5 years. So the condo market is what it is this year. Things will move. We've got a few tricky listings. I'm going after this to go see a 487 square foot unit and then a 441 square foot unit. And I've told both sellers, this is probably going to take on average 45 days to sell. Again, they're vacant. We're going to clean them, paint them. We're going to stage them. Great marketing. That's what sells. Because one of our units, a bit off topic here, but bear with me because this is the empirical evidence that you want to know. One of our units is going to be $499. The same unit is up for $479. How in the world are we doing that? Well, that unit is tenanted. It's tenanted. I would not put a buyer in that. I just wouldn't. I'll get into that in a moment. Trust me on this. And there's 24 hours notice needed, and it shows like absolute crap, and there are no photos. So I have no problem saying, here's our unit at $499. Someone's going to say, yeah, but this one's up for $479 and it's the same. My answer, go buy that one. Because you know what the response to that is? Yeah, no, but we want yours. Oh, you do? It's called leverage. I have something you want, and that helps with the price in this market. I'll come back to the tenancy situation in a moment. So sum up that thought, guys, on the condo market is that, yes, it's going to be a bit more of a slog this year. And if you want to look 2 to 5 years from now, I think specifically 5 years from now, because it takes condos 4 to 5 years from start to finish, we're not selling any pre-construction condos in 2023, 2024. Again, that's the royal we, not me, because I've never sold one. But if nothing's being sold, then nothing's being built, and we're going to have a massive deficit in 5 years. So again, you have to distinguish between freehold and condo as it pertains to every single statistic this year, whether it's sales, whether it's inventory, whether it's price. So another trend to be on the lookout for. What did David write here? Impossible to sell tenanted condos. I told you I was going to come back to this. You might have heard this story before, but I'm going to tell it again. It's a goodie. Clients of mine own 15 condos. So right off the bat, society says they're monsters because condos are for living, not for investing. Right? There's my joke. We can put a note in the comments section if that's what you believe, and then you and I will never have a coffee. Hang on a minute here. Nature's fruit juice. No, but seriously, clients of mine own 15 condos. I'm selling them all one at a time for them. They're exiting the space. And this is, I think, 2021 through 2023. And the last one, of course, it's always the way. In 2023, we have a problem tenant. Tenant is special, very different. And we got access once. And we sold it. I got access one time. Because the tenant said, could you give me like maybe a year? And I was like, no, they're selling it now. Well, I have some things to take care of in my life. And if you could just give me like maybe 10 to 12 months. Listen, I understand that housing's a problem and I don't want to get into this, but the owner of the property should be able to do what they want with it. This tenant's on a month-to-month lease. And I believe in the rule of law. And the rule of law says that while the landlord can't kick the tenant out, a buyer for personal use can give them notice. So we sold the condo. The buyer gave notice to the tenant for personal use. Totally legal. It was documented, right? They signed an affidavit. And when push came to shove, the buyer took the requisite notice as well as a signed affidavit swearing to the fact they're moving in, and then a confirmation of their mortgage to show the tenant, we are moving into this. And then the tenant said, I'm not leaving. The tenant exercised her right to have a hearing in front of the LTB. And by the time the notice for the hearing came, well, it was 9 months later, and the buyers had already walked away and they went and bought something else, and the tenant got to stay. That's the system that we live in. So you heard it here first from me. I will not put a buyer in a property that's tenanted because the risk of the tenant leaving or staying is just too high. So there's a condo and it's tenanted, and the listing says tenant will stay or go. It doesn't matter. In fact, you could advertise that the tenant has given legal notice to vacate. Doesn't matter. Tenant can change their mind. So if you're a buyer and you purchase this in January, when you're getting ready to close in March, and the tenant says, yep, I'm leaving, and you go and you're all ready, and then you go for your buyer visit one day before closing and the tenant's sitting on their couch, what do you do? You'd better have a clause that says that you're not taking possession of that if the tenant's still there. This is going to be a massive issue in 2025. And it started for me in 2023, and I've been warning people and I've been writing about it, but I think this is going to be a major factor affecting the market in 2025. So all told, we've discussed sales, inventory, prices, politics. Boy, did we ever discuss politics. We talked about Trump tariffs. We talked about Trudeau and the economy. We talked about, of course, what happens if a conservative government comes in. We've talked about inflation. We've talked about interest rates. We've talked about unemployment. I've given you some basic predictions, but essentially what it all boils down to is, what does this mean for you? Are you a seller? Are you a buyer? Are you an investor? I would say this: if you're a seller, you have to time the market. If you're a buyer, it's impossible to time the market. What did he just say? If you're a seller, you have to time the market in all seriousness. And what I mean by that is that you have to take on a risk-reward proposition, that you're going to put your property on the market either in January, when a lot of the buyers still want to see what else is out there, but you're going to have no competition. Or you're going to take February, March, which historically has been the peak, but you'd better be ready to go, and it has to be perfect because there's a lot of competition. Or you want to take a wait and see approach. What's going to happen with Trump and his tariffs? What's going to happen with the Canadian election, if there even is one? Or does Justin pull a Pierre and stay for another 4 years and I'll move to Montana with my family? But if that happens, do you want to put your property on the market in April or May? Again, what did I say earlier? By May and June of last year, the market was non-existent. Freehold, city center. I'm talking about a little $1.3 million semi on the east side. It was absolute crickets. Offer nights were working at a 10% clip in the month of June. That is what happened in 2024. So you've got to time the market. That's what you have to do. But you also, and I've got a note here, preparation is key. What TRG does with listings. Oh, yes, right. So not to make this about us, but I don't believe in doing something unless it's done properly. And that is exactly what we do with all of our listings. In fact, I'm going to be honest here, end of December, so 3 days before the new year, I went on a listing presentation. I met a couple and we just kind of disagreed about how to sell real estate. I told them what we do. They didn't want any of it. They didn't want to stage. They didn't want to move out. They didn't want to box stuff up. They said, we just want to do it as it is. I said, okay, but you do want to get 10% less for your house, right? And they were like, what? No. I was like, oh, so sorry, which one is it? Do you want to leave it exactly as is and get 10% less? Or do you want to do everything I just said and get 10% more? See where I'm going with this? In the end, they offered me the listing and I politely declined because that's not how I sell real estate. We believe in doing everything that you possibly can. And let's say in a completely hypothetical situation, I was ready to go to market and a pre-home inspection revealed one piece of knob and tube wiring in the home. What would I do? I would have my electrician go in there, remove it, get an ESA certificate, and then give it to my home inspector who could revise the inspection and show that there's no knob and tube wiring. That is what we do. The stakes are so high in this market. You have to get out of your house, you have to clean it, and you have to paint it, you have to put all your stuff in storage, and you have to let us stage it. We have to do a pre-inspection. We have to fix anything that it shows up, and then we've got to market it. We have, again, I said I wouldn't make this about what we do, but we have all of the best marketing vehicles, and that is what we have to do as sellers. Now, if you're a buyer, it's impossible to time the market. It's kind of funny because I said as a seller, you have to time the market. If you're a buyer, you've got to look at, do I want to be active when there's the most inventory and I have the most selection, or do I want to be active when prices are historically a little bit lower? So typically I've always found as a buyer, Jan, Feb, great time to buy, or July, August. And then buyers are going to say, but I want to do it in March, April, May, and June because that's when I have the most inventory. Yes, I totally understand that, but you may not have that benefit. So we're in this unique position that sort of we find ourselves in every year at this time, which is that there are buyers out there that are going to be presented with an opportunity, and a lot of them are going to say it's too soon. And we call that the buyer's curse. Now, I call the buyer's curse when you're a new buyer. You go out the very first time and you find the perfect home because it's really tough to pull the trigger when you've only been out once. And I tell my clients, I'm like, yeah, it's the buyer's curse. You wish this was the 5th time out. You wish you'd seen 16 properties and now you find this. And a lot of times the buyers pass, and again, rightfully so, to each their own. I might say to them, in my 20 years of experience, I can tell you this is the house for you and you're going to regret not buying this, but they've all got to get there on their own. Some people pull the trigger and some people don't. And then, 3 months later, God, remember the first house that we saw? So we're in this unique this unique time period right now where you're going to see that. And the question becomes, if you're a buyer and you get out there and you see the first great new listing of the year and it's perfect, will you make a bid? Will you pull the trigger or will you wait? So my advice to buyers is take a step back and kind of remember your why. Why am I doing this? Why am I buying this house? I live in a condo. I want to move forward with my life. Okay, I understand that. How about I'm renting a townhouse with my partner. We're expecting a child in the summer. We'd like to get a home with grass and in a school district. Okay, great. Remember your why. And it sounds very salesy. I understand that. And I also understand fear. I understand fear of missing out. I understand because how many clients have I had that bought a property and then continued to monitor MLS and email me afterwards? What do you think about this? What do you think about this? It's human nature, guys. So for a buyer, I want to say that I don't envy you on the one hand, because we're early in the year, going to have to make that decision. But on the other hand, I do envy you because I think finally there's going to be quality listings coming out. And the issue I found in the fall was a real lack of quality listings. I wrote a blog on, I think I said, what is the definition of a quality listing? And based on all of the relists and all the tenanted stuff and just the kind of junk out there, I figured maybe 1 out of every 4 listings in the freehold market was quality. And God, when it comes to the condo market, and here's again, a reason for me to kind of smooth over the sheer amount of inventory out there. 1 bedroom, 1 bathroom, that's what my buyer's looking for. I'm not putting you in City Place. I'm not putting you in ICE. You're not going into all these different buildings. I think it's less. I think if I were to look at 100 1-bed, 1-bath listings in C1, C8, I might find 3 or 4 that I want to send to a buyer client. Now that's me. I'm picky. But I kind of know what I'm talking about. I know real estate. I'm not selling you an assignment. I'm not selling you brand new at an inflated price because it was bought in pre-con and these folks need to make their money back. So again, you go back to the concept of quality listings. So again, if you're a buyer, I envy you and I don't. All the same. The other point, which I'm going to make one more time before we part here, is that I don't envy the uncertainty and that you as a buyer or you as a seller or you as an investor have to wade through. Canadian federal election, prorogue parliament uncertainty, Trump, tariffs, recessionary pressures, interest rates. There's a lot to sort through. And at the end of the day, if you decide to hold off until April when there's more clarity, you're going to pay a higher price. If you decide to do it now, you'll get a better deal, but you've got to take on that level of uncertainty. I wouldn't say that level of risk, but I think a lot of those people out there will. So guys, that was a fun one. As I mentioned, I got to run downtown and see 2 micro condos. No, micro condos are 300 square feet. I'm seeing a 487 square foot condo. That's an absolute monster. Folks, thank you so much for joining me here on the Last Honest Realtor, the very first video and podcast of 2025. Please remember to like, comment, or subscribe wherever you get your podcasts. If you're watching on YouTube, feel free to drop me a comment, even if it's a cynical one like, real estate gonna fall 90%, poof, oof. And we will see you next time here on the Last Honest Realtor.